Let's get into today's session. Wow, where do we begin? Energy markets are sending shockwaves through global financial systems. And on that, natural gas prices are starting to gain a little bit of traction as supply risk intensifies. Emerging currencies like the South African rand are feeling the pressure as investors move towards safer assets. And global equities are trying to hold their footing as geopolitical uncertainty rises. So, if markets had a mood today, it would probably be cautiously nervous. The kind of atmosphere where headlines move prices faster than coffee moves traders on a Monday morning. For those of you who've never attended a session with me before, good morning. My name is Francois. I'm your market analyst here at ATFX Africa. This is your live market brief. So today we are analyzing USD, ZAR, natural gas, and the S&P 500. Three markets currently reacting to a rapidly evolving geopolitical environment and a sudden energy supply shock. So let's get into it. And let's begin today with the South African Rand. So the South African Rand has come under some renewed pressure as global investors shift away from emerging markets and towards safe haven currencies. So recent price action does show that USD ZAR is rising towards around about that 1660 to 1618 Rand to the dollar, marking some of the weakest levels for the Rand since last year, December. Now, the main driver behind this move is global risk aversion. As geopolitical tension in the Middle East continue to escalate, international capital is flowing towards assets perceived as safer, particularly the US dollar. Now, this dynamic is common during periods of uncertainty. Now, when global markets become nervous, investors often reduce exposure to emerging markets and increase allocations to safer currencies and government bonds. Now, another key factor influencing the Rand is energy prices. So, higher oil and gas prices increase global inflation risk and can put pressure on energy importing economies like South Africa. So, I don't want to be the bearer of bad news, but I want to say expect some fuel hikes in the near future. So this creates additional strain, obviously, on our currency when geopolitical risk is already elevated. Now, at the same time, the South African Reserve Bank now faces a more complicated policy outlook. Rising energy costs could push inflation higher, which means policymakers may have to reconsider the path of interest. Now, markets have already begun adjusting expectations, with some seeing the possibility of a rate hike at the upcoming March 26 meeting. Now, a sharp shift from expectations of rate cuts just days earlier. I mean, literally, we were having discussions about rate cuts last week during the market brief, and now expectations have shifted towards rate hikes. So fundamentally, USD ZAR is being driven by three key focus areas right now: global risk sentiment, safe haven demand for the US dollar, and energy driven inflation risk. Traders, if you have any questions about anything I just said, please feel free to send that through to me. I would gladly look and answer any questions that you might have. With that being said, let's have a bit of a look at our charts for today. So, USD ZAR is remaining in a volatile but identifiable range. Okay. So, Support is currently quite firm here at the psychological 16 Rand to the dollar, which was our pivot area in recent trading. Now, resistance is currently just a little bit above where the market is trading at the moment, which is sitting here at 1660. And that is followed by a higher level up here at 1750 to the dollar. Now, momentum indicators are currently reflecting volatility rather than strong directional trends, meaning price action remains highly sensitive to geopolitical headlines. So, in other words, the Rand right now is trading news almost as much as fundamentals. So, with that being said, we can drop this down to a bit of a lower time frame, having a look here on the 15-minute time frame. So here you can see we've got a massive push lower on the 15 minutes here at the moment. So if we could see an intraday break, I would say below the 1630 to the dollar, that could open up for a push for a potential retest here at 16. Okay. So a break below 1630 could open up the doors towards a test of 16. However, if we get a push above, let's go with 1664, even if you want to round it off to like a more of a round number, you can go 1665. If that breaks, that could actually open up the opportunity for a push towards 17 or maybe even that higher level here at 1750. So that's from more of an intraday perspective. Again, don't just jump the gun. Wait for proper confirmation before entering into any positions and then take things from there on forward. Traders, if there's any questions on your end, please feel free to ask. It's what I'm here for. It's what I'm here to answer. It's what I'm here to assist. However, moving over to commodities and more specifically, one that has made headlines quite often lately, which is natural gas. Now, natural gas markets are experiencing a significant surge in volatility as the geopolitical situation continues to evolve. Now, price has rebounded towards the $3 per million British thermal units following a sharp decline, obviously, last week and the week before and the week before. So, the catalyst behind this volatility is the ongoing conflict in that involving the US and Israel and Iran, which has now entered its sixth day with no clear signs of a resolution. Now, supply concerns have intensified for two key reasons. First, the world's largest liquid natural gas facility in Qatar remains offline, creating uncertainty around global gas supply. Number two, the Strait of Hormuz remains closed. Now, this is one of the most important shipping routes for global energy exports. So, this combination has raised fears that liquid natural gas shipments could face prolonged disruptions, forcing global markets to compete for alternative supplies. Now, at the same time, natural gas inventories in the United States are expected to have declined again last week, reflecting continued winter demand. Okay. However, markets are also balancing these supply risk against diplomatic developments. Reports earlier suggest that Iran might be open to some discussions to end the conflict, although those claims were later denied. So, for natural gas, the key takeaway here is relatively simple. The market is currently trading geopolitical headlines rather than traditional supply demand fundamentals alone. That USD ZAR 15-minute Ichimoku cloud is thin. If it breaks through, it would be interesting. That is interesting. Let's go have a quick look at that. And then we'll look at the charts for natural gas. So let's go here. Okay, so this is obviously our natural gas chart. I will revert back to it just now. So yes, here we can see if we zoom in here a bit. So here's the Ichimoku cloud at the bottom. So still in that bullish, but after that big push. And like he says as well, the cloud is relatively thin at the moment. So a a break here would also then obviously be a break of this support level that I have here as well. Hence why I said a break here. Specifically, I would like to see a break for these lower levels, which is that 1330. But yeah, there are quite a few indicators at the moment that is all pointing towards a possibility for some nice downturn, because the fact that even if you can see here, like normally a really thin cloud like that means a reduced amount of momentum or liquidity within the market. So there is definitely some potential here for more upside, if that makes sense. So yeah, Robert, well spotted on that one. Okay. That being said, let's go back to natural gas. So having a look at the charts here, natural gas is operating in a high volatility environment right now. Okay. So support is obviously here near these recent consolidation zones, which is just a little bit below the current rebound, which is sitting there at $2.80 per million British thermal units. And then resistance is firstly the recent weekly highs where we saw some profit taking, which is sitting here at $3.20, and then obviously higher up with some dynamic resistance areas all the way to our 200 exponential moving average, which is currently sitting just above that $3.60 level. So momentum indicators on this one shows bullish pressure, but volatility remains elevated due to the geopolitical nature of the catalyst. So in practical terms, this market could see sharp swings in either direction, obviously just depending on the next major headline. So if we drop this to a lower time frame, we can see there's quite a nice bit of price action for this to go higher. Before looking at any short positions, I would like for a nice big break of this week low here at the bottom. But otherwise, if we do continue with this bullish momentum that we are seeing here at the moment, a break above $3.05 could be a nice little short day trade just for a push higher towards this $3.15, maybe even $3.20, where we came from. So definitely some nice intraday opportunities here as well at the moment. Okay, so let's finish things off for today with equities, more specifically US equities, where we've seen the US equity markets are reacting cautiously to the same geopolitical developments affecting energy markets. Now, despite rising global tension, the S&P 500 recently staged a modest rebound. Now, this modest rebound was supported by strong performance from technology and semiconductor companies. In regular trading, we saw the S&P 500 gain around 0.8%, while the Nasdaq saw even stronger gains driven by tech stocks such as Nvidia, Tesla, Amazon, and Micron. However, the broader macro picture remains extremely complex. Energy supply disruptions and rising oil prices have raised concerns about inflation pressure, which could delay potential interest rates from central banks. Now, higher energy costs can influence equity markets in several ways. Increase corporate operation costs. It reduces consumer spending power. It complicates monetary policy expectations. Now, at the same time, geopolitical tension showed some signs of easing as the US government indicated it would provide risk insurance and naval escorts to vessels transiting the Persian Gulf. Now, reports also suggest that as stated earlier, that Iranian operatives have reached out to explore potential peace discussions. So fundamentally, the S&P 500 is currently balancing strong corporate performance with a little bit of macro uncertainty. So when we do have a look at the charts, from a technical perspective, the S&P 500 remains in a consolidative phase. Now, key levels to watch here, if we have a look, firstly, near-term support is sitting here at 6,820, followed by the recent weekly lows where buyers previously stepped in, which was down here at 6,720. Now, when we have a look at resistance, our near-term resistance is sitting around the 6,900 level. You can see been rejected quite a few times, followed by the recent record highs, which is where profit taking did emerge at that 7,000 level. So on this one, momentum indicators are suggesting moderate bullish momentum, meaning the market appears to be pausing rather than reversing. So in other words, equities are catching their breath while waiting for clarity on the geopolitical front. So when we do have a look at lower time frames, you can obviously see here we've seen some nice bullish momentum over the last 15 minutes. Everything is pointing in an upward direction. So a nice clean break above the 6,900 level could open up the doors towards a retest, potentially of that previous all-time high. So this is definitely a potential opportunity for us as traders today to explore a little bit further. So as we are going into today's session, I would say there are a few things to watch out for and specific catalysts that could influence markets today. Number one, Middle East developments. Any updates on shipping routes, military activity, or diplomatic negotiations could rapidly impact energy markets and global risk sentiment. Number two, energy market supply signals. So any developments involving liquid natural gas facilities or shipping routes near the Straits of Hormuz should be closely watched. And then lastly, global risk sentiment. So if we start seeing investors continue to move into safe haven assets, emerging currencies and equities could remain under pressure. So traders, markets right now are highly sensitive to geopolitical headlines. And the big question for us now is, if energy prices keep rising, how long can global equity markets remain calm? We might get that answer sooner than later. Now, with that being said, I just want to see if there is any final questions from anyone. I agree with S&P. Fantastic. Thank you so much. Okay, so traders, with that being said, I think that kind of brings us to the end of today's market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you have not yet experienced the difference for yourself, simply head over to atfx.com and go and have a look. So traders, until next time, stay sharp, stay focused, and trade smart.